with our big market voice of the day, Gautam Trivedi, Managing Director and Head of Equities with Religare Capital Markets, joins us live. Gautam, morning. Thank you for joining us. I just read a strategy report dated 25th of April, morning. Slightly dated though. And the fine print of the report is following, which is that you're advising your clients to buy defensives, to buy pharma, to stay invested in consumption names, and they should avoid domestic cyclicals such as financials and industrials. What's the thinking behind this call?
Yeah, I think at this point, the bigger concern that foreigners are having right now is on the fiscal situation. Again, I'm not saying anything that's dramatically new, but the concern since the budget has actually amplified even more. A lot of foreign institutional investors that were reasonably active since or before the budget actually have significantly cut down their positions and are actually sitting and waiting for clarity on GAAR, clarity on fiscal discipline going forward. So I think we are recommending people to take on a defensive portfolio. Even for that matter, consumer stocks, even though they're not cheap, you are looking at these stocks anywhere from 20 to 25 times forward earnings. But still, there is appetite even now to buy these stocks.
Gautam, hi, morning. The final notification on GAAR is going to come out on May 7, just a few days away. What stand A do you think the government is going to take, and what is it that the markets are expecting by way of a texture on this note?
I think what is, if I step back for a minute and look at the volumes and in general the net FI numbers since the announcement of GAAR, which was on the 16th of March, which was the day of the budget. If you look at the absolute amount, and I tracked this just recently, $8.8 billion were invested between the 1st of January this year to the 15th of March. From the 16th of March till yesterday, a net $141 million have been invested into the market. So it clearly tells you that the overall appetite for India for the time being has clearly shrunk. Number one. Number two, I think what is also relevant is that the government has announced that GAAR will be implemented, but has been quiet on what the guidelines are. So I think that confusion, and that's been over 6 weeks of that confusion, I think has led to multiple theories, and obviously foreigners don't like that, domestic investors don't like that, and hence that's cooled off the market. So I think what people are looking forward to is a final clarity on whether it's going to be retrospective or not, and more importantly, what exactly is going to be the tax rate. There's still enough confusion, a lot of legal debate going on, but nobody knows what the real numbers are.
So Gautam, let me construct two scenarios. Later this month we get clarity on GAAR, and if GAAR is indeed implemented with retrospect, what will happen to markets? And if GAAR is implemented but no retrospective clauses there, what will happen to markets?
I think if GAAR is implemented with retrospective effect, will definitely be a big negative for the market. If it's not, I think that will be taken as a positive. But more importantly, it won't be as big a positive as the fact that there's finality to this whole debate which has been ensuing for the last 6 weeks. So I think that is really what the bigger concern is. And I don't think we, for that matter, or for the matter, most foreigners are averse to paying taxes. All they're looking for is the final guidelines and what exactly they are.
Do you expect markets to either appreciate sharply or correct sharply the minute the final GAAR guidelines are tabled?
I think if they're all positive, there will definitely be a relief rally, and I think I will personally be getting on the phone with a lot of FIs to encourage them to come back and invest in India.
So after this interview, what's the first thing you will do when you'll pick up your phone? Which are the stocks you're telling your clients to buy, and which are the stocks you're telling your clients to sell?
We are still, like I said, and as the report said, remaining defensive. That is not significantly going to change between now and Monday. But we still like the auto space. We like mid-cap IT. The valuation gap between the large caps and the mid-caps is still very, very wide, and we like names like Polaris, Mindtree. We also actually like Infosys among the large caps, given the fact that it's now trading at 14 times forward earnings and tad lower than HCL Tech, which has never happened in the history of Infosys' trading history. So these are the stocks and sectors that we like.
Okay, Gautam, that's a very interesting thought. We'll be back with you and chat more about your IT picks in just a bit, but let me quickly recap the trading ideas coming in this morning from our technical experts. Ashwini Gujral, he's got a buy on Unilever, Arvind as well as the stock he recommends buying into.
Gautam, there is a reason why defensives or consumption stocks in the near term are outperforming. There is global uncertainty. Consumer stocks have a strong business model. They have virtual zero debt on their balance sheet, and they have a predictable return on equity. But at these levels, are consumer stocks pricing in a near perfect scenario?
I think for the most part, yes, they are. But unfortunately, I think investors in particular are not looking at being adventurous and are, as you said, sticking to safer bets. I think, unfortunately, even though their IT sector, for example, as I said, the mid-cap IT space is very attractive, there is more interest in being safe with the money versus picking risky bets.
Let's spend some more time discussing consumer names, because that's the big topic of discussion, so to speak. Within the consumer space, what do you like? Where do you think there is a boom and there is a bust?
I don't think there's a boom or bust scenario at this point, but I think the stocks that I do think in particular that stand out would be Imami. The stock has underperformed its peers this year. It has picked up in the past about 3 weeks or so after clarity on the hospital event which took place earlier in the year, where the promoters were in jail. They're now out of jail, and I think they're very smart about the fact that they are handing over the management or planning to hand over the management of the hospital to professionals. And dealing themselves from the day-to-day running of the hospital, which will be, I think, a huge positive. Though the two are not related, the stock in particular had got punished, and I think that's one stock that's playing catch-up with its peers. I would definitely put my money on Imami.
Gautam, it's quite interesting to hear your views on Infosys at a time when the street is trying to divide their portfolios between a TCS, Wipro, or for that matter, a Hexaware or a NetSeal Technologies. What makes you so bullish, besides, of course, the valuation parameter that you just talked about?
Well, I think it is an anomaly that you have Infosys trading at such a wide discount to the rest of more so with the other three players, and more so I think at a discount, a slight discount to HCL Tech. I think that is fundamentally the reason why we think Infosys will see some degree of buying coming in, and that's the response we're getting from the investors we've been speaking to. So valuation is in I think the number one reason I would be putting my money on Infosys.
Gautam, if I look at the color of the management commentary from Infosys, the management is clearly of the view that in the near term, we will not compromise. We are committed to protect our margins. We are ready to lose revenue. Do you think this strategy, which so far has worked like a charm for Infosys, could backfire? Because 1990s and early 2000s, that was a different environment. This is 2012, and the market conditions currently are also different.
I agree, but I think if you look at historically, the management speak at Infosys has always been conservative. You are looking at a gradual rebound in the US economy, and I think that clearly puts the management. I think in particular is undervaluing the stock, and I think there's significantly more upside than what the management's guiding for.
Do you worry about auto sales numbers? If I map what companies have reported for the month of April, there seems to be a marked slowdown, be it two-wheeler, four-wheeler, or for that matter, CV sales.
Yeah, that's a fair question. I think we've done a series of road trips for investors in the past about 6 months. And in the passenger car segment, we were quite surprised to find two particular myths which were busted. The first myth being the fact that interest rates have a huge impact on passenger sales. Apparently they don't. That's the feedback we got from most of the dealers we met across the country in UP, Bihar, Gujarat, Andhra Pradesh. What we also discovered is that the rise in petroleum prices, petrol and diesel in particular, do have an impact, but not as big an impact as the market actually thinks. So a lot of the demand for passenger cars in particular, and also for that matter CVs, is sentiment driven. Unfortunately, the sentiment at this point is not great in the country, and obviously that's making a lot of people hold off or put off buying either whether it be CVs or passenger cars. Of course, the two-wheeler industry seems to be somewhat immune from this. I mean, you're still forecasting a 16% year-on-year growth for this particular year. But more importantly, I think getting back to CVs and passenger cars, I think it's the sentiment in general that needs to improve in the country, and it's not just about improving the fiscal. I think it's the fact that the government needs to prove, the UPA government for that matter, needs to prove that a lot of the decisions and the announcements that they make are finally implemented versus being lost in political debate.
Gautam, is it a clear avoid when it comes to the telecom space, considering the whole issue on the spectrum is still pretty much playing out?
I think it is. I agree with you. The fact is, we are at this point telling our investors to stay away from sectors that the government is going after. And if you look at the unfolding of events over the past 3 months, you've seen telecoms, you've seen tires, you've seen cement. Today, this morning, headlines are screaming about Reliance being slapped with a tax. So I think the government is going after sectors that have historically been making a lot of money, throwing out a lot of money, and finding ways and means and how they can basically increase revenue from these sectors. And I guess I forgot to mention a couple other sectors like merchant power, coal. So I think telecom will continue to be, I think, at the end of one sector where effectively the government will go after to raise revenues given its massive fiscal deficit.
So whether it's G2G or B2G, which is government to government or business to government, anywhere where there is a direct or indirect involvement of government, I guess those businesses are taking it easy. So Gautam, what is your assessment? Is the India story over? Do you think Indian equity markets, they've lost the charm?
No, I don't think so. I think we are reading way too much into this. I think this is going to be another tough year as far as the fiscal situation is concerned. And I think no matter who you talk to or no matter how many times you go over the budget documents, it's hard to really come up with how the government can bridge the fiscal deficit or basically lower it. So I think that remains clearly a big concern. I think the bigger concern which we look at to arrest the fall of rupee is how does the government go ahead and attract more FI and FDI investment. And I think hopefully Monday's announcement on GAAR will put to rest a lot of the issues and we end up seeing more inflows coming in which will hopefully stabilize the rupee.
Gautam, you know, last night I got a very interesting email from a viewer and I would love to seek your opinion on this one. And the email was that in last 4 years, Indian equities have managed to underperform fixed deposits, they've managed to underperform FMPs, and they've managed to underperform gold. Does it make sense for a retail investor to invest in equities at all?
See, that's a fair point, but that's the assessment of the last 4 years. I'm sure if you look at it over a longer time series, maybe over the last 10 to 15 years, the answer will be very different. I think the problem is with interest rates as high as where they are right now, banks offering anywhere from 10 to 11% on fixed deposits, the average retail investor is just not interested in putting money to risk in the equity markets. I think that's really the fundamental problem. And until interest rates don't come down, you will not see the retail investor returning to the equity markets. We speak to our retail team. Religare Retail is now the largest retail broker in the country, and they too have seen retail investors not being as active as they were even as early as 6 months ago. So I think the overall participation by retail investors has definitely come down. Mutual funds have been hit with redemptions. You've seen almost 20,000 crores of redemptions year to date, which obviously is a massive number. We've never seen a dichotomy where retail investors have actually been sellers when foreign institutional investors actually have been buyers. So typically the two have moved together, but this year around that's not been the case. So I think retail investors will only come back as interest rates start to fall.
Okay, Gautam, good to have you on the show. Thanks very much for taking time out and speaking with us today on ET Now. Quickly revisit what the index is up to. 5170 is where the Nifty spot is, while Cipla is your big mover in trade. So is the case with the GE Shipping, and Wipro as well is making a smart move, up about almost 1%. The selling pressure on IRB infrastructure, that continues, and now it's just about defending that 145 mark. So after a 16% cut yesterday, it's another 4% gone for that one. Hero Motorcorp as well, the pressure continues there too, and Piramal Healthcare and Pantaloon are two names which again